The following is a presentation of TFNN. Now, the author of Mastering Probability, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the November 8th terrific Thursday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes. Thanks so much for joining me, folks. I absolutely treasure your presence here today. My outcome is to help you to become a better money master and to provide you with the tools so that you can lead an inspired life, because leading an inspired life, that is what it's all about. So let's go take a look at one of our tools. I love this tool. This is called Cultivating Your Enterprising Nature. Cultivating Your Enterprising Nature. Now, I love to be able to maybe start a tool off with a question. So let me ask you a question. If you could do better financially, should you? You see, questions control your focus, so it's a nice way to be able to start off the day. I think that it's a pretty good question for you to ask yourself each and every day. If you could do better financially, should you? There's folks out there that don't believe that they should. You know, in the time that you've allotted to labor, maybe to economics, to success, to achievement, to productivity, to creating, maybe to just simply the creation of value, the development of your skills and creativity, I again ask you, if you could do better, should you? You know, one of the greatest satisfactions of living life to the fullest is always doing the best that you can do with whatever it is that you have. That's the American way out there. Doing less than your best, folks, that has ways of eroding the psyche. You never want to do less than you possibly can. You always want to be able to give your all out there. We seem to be creatures of enterprise. Surely this is the reason for the seasons. We know we're going through a season. There's been snow and nor'easter, now, up in the Northeast. So we know we're going through seasons out here. The soil and the sun, folks, and the rain and the seed all seem to say one thing. What can you do with us? Do you have the genius to make something unique of us? Life says, here's the raw material. What splendid things can you do for us? What can you produce for us? I say go for it, folks. Life, it's a genius. It's just simply the sun, the soil, the seed. It's so wonderful out there. What is it? The universe gives you all this raw material, all of your skill sets out there. I say you should just simply go for it. Use your full genius that you have. Develop your potential in all areas of your life, including earning money. Live an enterprising life, folks. That is what it's all about. Let's go take a look at the enterprising markets that we've got out here. Whoosh, what a day yesterday. 312 points to the downside in the Dow. S&P off 33 points. If we come into the futures marketplace, normally I start off taking a look at the screen of the S&P 500 futures. Usually we take a look at the 30-minute chart. We're going to start off this morning taking a look at the euro-US dollar currency pair. It's about as bullish of a chart that I could find out there. And so the market should pop today. You had a nice trend reading yesterday. I think it was about 2 point, I don't have the exact number here on my screen. It was over 2. When you get a trend reading over 2, 2.37. That's usually good for a one-day pop, at least a one-day pop in the marketplace. That's what I expect today. We're looking for where the bulls are hanging out. I've identified where Mario Draghi is hanging out in the euro. It's at the price level of 1.27187. That's where he made his first sign at 6 o'clock this morning. Apparently that sign that he put up wasn't strong enough. He had to come back in at the 9 o'clock session. Coming in at 9 o'clock, he has made, or the euro has made, 2 bullish engulfing candles out there. So it's trying to cement a pretty decent bottom out there. Why? Take a look at the currency marketplace. Because of the directional relationship that it has to the markets. If we see a stronger euro, our markets will move up. If we see a weaker euro, our markets will move down. We're looking at more of an ultra short-term chart. We're taking a look at a 30-minute chart out here. We'll certainly go take a look at the daily chart. If we take a look at futures right now, you've got Dow futures up about 27 points. ES Mini's up 2.5, so it should open up pretty flat. NASDAQ futures up about 6.5. Russell 2000 up a couple points. King dollar's up 7 ticks out at 80.94. Gold is up 20 cents, so that's nothing out there. That's traded 17.14. Not that that's nothing. You've got silver up 10 pennies out at 31.77 over in Europe right now. They're trying to hold on to their gains. You've got the DAX up about 6 points, the FTSE up 4. Our call-in number is always 877-927-6648. Now, what I want to do here is we're taking a look at the euro. And if you're watching us on Tiger TV, thank you so much for doing that. Maybe you're listening on the radio. Maybe it's your mobile device. And if you are, you can always catch an archive of this show on Channel 9. So I'm going to go ahead and pull the euro back a bit here. And really the first time that we saw any real bulls step out in any kind of fashion, well, they stepped out here during the time period between 4 in the morning and 5 in the morning back on November 5th. Today is November 8th already, so it was just a few days ago that the bulls were last seen. The bulls showed their self this morning, as I said, identifying themselves by creating two bullish engulfing candles out here. Of course, the market got into a little bit of an oversold condition at about 5:30 this morning, so you would expect a little bit of a bounce here. But it's going to be important to watch this chart. Why? Because if you get a close on the 30-minute chart below the 1.27289, that is going to lead to lower prices, continued lower prices in our marketplace out here. If we go take a look at a daily chart, let's just switch this up to the daily chart here. On the euro, you're going to see that the area that was a consolidation pattern clearly was broken out there. You know, and since it was a sideways consolidation, yeah, it's formed an A to B equals C to. I mean, if I come up to the swing point of September 17th's high, 1.31708, down to the low that was put in on October 1st, back up to the high on October 7th, you'll see that it certainly made a 1 A to B equals CD, but it was a sideways consolidation. So you didn't even need to know A to B equals CD. On the daily chart, no bulls really showing up. You're just simply into Mario Draghi Day of September 7th out there. If we do take a look at retracements, though, from the low to the high on the euro, we're going to go down to the last time that the euro had really gotten into a oversold position. That was on July 24th out there. So we're going to go from those lows, 1.20411, all the way up to the high from September 17th. What you will see is that what the euro is doing, it's trading at the 0.382 retracement level. What does that mean? Well, first, it's the first level that any equity, anything that you would draw a retracement tool on, would get to. That's a dead cat bounce at this stage. Until that level gets taken out, the euro actually still has some strength. Yes, it broke that horizontal trading range that it was in, that little consolidation pattern. But you want to make sure you understand where all the different levels are. It's like going up or down an elevator. And in this case here, the first floor on that elevator is 1.27, looks like about 1.27393, trading out right now 1.27433 out there. So it's really at that 0.382. Oftentimes, people get off on that first floor when you are inside an elevator. We'll see, you know, the 30-minute chart is indicating that the bulls, and that you should see a bounce. Where would you see a bounce to? Well, you know, if you're going to take a look at a bounce, you're going to see it first try to get inside this little consolidation area. That's what it did yesterday. Got up there, rejected it. You know, it should try for that level again. Of course, if we just simply take on the daily chart, if we take a look at from the most recent swing point high, that would be October 17th, down, and I'll put this in a black line so that you can see it. It would say, and if you take a look at what it actually did, well, forget about what it did yesterday. It should get back up to yesterday's high. That high, because that's the 0.382 level, just simply that move down. That would be, again, the first floor going back up. And you want to understand your retracement levels, most certainly. They act as magnets. A 0.382 retracement level, I don't have my rubber band kinetic energy source here right now, but so far with regard to the euro, yes, our markets, I'll call it, I'll just say fell apart a little bit yesterday. You know, you're down 2.5% on the composite, 2.4% on the S&P, 2.4% on the Dow. That's a little bit of a stinger out there. A lot of built-up energy, you know, as people taking tax losses or taking gains because they're worried about what's going to happen next year. I could be some of it. I mean, so many different things. All you have to do is pay attention to the reaction in the markets. We certainly saw volume to the downside, but there are indicators out there that suggest that we should see a bounce in the market. You know, yesterday, as I was on the air, whether it was doing the Trader's Edge show that I kick off at 9 o'clock or when Tom and I were doing the Money Masters show, we were calling for a bounce in the marketplace. But calling for a bounce, folks, what you also are doing is you're waiting for the bulls to show up. You're waiting for those signs. If you want to really understand what that is, I laid out in my newsletter all the time. Go take a look. If you haven't had a chance, go test out the newsletter. I lay it out for you exactly, and you'll be able to visually see it. You know, it's not just a newsletter where I say do this or do that. I really show you what's going on, why. We actually went ahead. I will tell you, we actually took a long position yesterday at 12:30. We got the signals. I show you what those signals are. So if you're interested in understanding how to identify where the bulls and bears show up, how to put a few things together, doesn't mean we're going to be right. We took a position. It's not like we're we've loaded up the truck or anything. I do expect a bounce. The signals are out there. We'll see if that's what we're going to get. But when I'm talking on the air and I say, hey, we're going to expect a bounce, what you need to be able to do is you need to be able to teach yourself, or let me teach you, or let somebody teach you how to identify where it is that you would put in those positions out there. And so, go to the homepage of TFNN.com, click on my name. You can test my newsletter service out for 30 days. Comes with an unconditional money-back guarantee. Yes, I have you put up a deposit, $149 deposit, because if you pay for something, folks, you pay attention. You get something for free, you just simply won't do it. So go out there and test that out. Again, if we take a look at the euro here, I'm spending time on the currency marketplace because that's where the biggest clues are coming from at the moment. We'll switch right over now to the ES Mini. We'll take a look. This is the 10-minute chart. What we can see taking place out here, it's really been traveling sideways. Here's the real danger here. This has been consolidating sideways ever since 11:40 yesterday morning. There was a little hammer down there at 11:40. But this has been traveling sideways. So the danger here is when you consolidate sideways. When you consolidate, folks, 65% of the time when the market breaks, it'll break in the direction that it came from. Well, we know that it was coming from higher to lower. 877-927-6648. The pre-market out here, you've got Universal Display getting displayed this morning. They closed at 28.18. They're now priced out at 21.05. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Welcome back, folks. Let's go take a look. We've had some callers over the past week or so taking a look at Chipotle. Taking a look at it for a short. And my recommendation out there was to wait for Chipotle to get back up to the area where it broke down. That area happens to be the most recent gap down, which was on October the 18th. October 18th, Chipotle gets to a price point of $283.11. And it gaps down, moves down with volume, 6.4, almost 6.4 million shares out there. Now, what Chipotle did yesterday was it got up to a high of 284.57, rejected that area, which is what you wanted to see. It came into that with 1 million shares, 1,061,000 shares. That candle from October 18th was actually a little bit over 2 million shares. So, even though your benchmark from a volume standpoint is really the gap down day, the ideal trade setup as you're coming into either a breakdown area or a breakout area. So breakout area would be just the reverse, where you've got an equity that broke out on volume and it's pulling back on lighter volume. This is just the opposite. So just where you're looking for a short opportunity. So Chipotle really came right into an area where it was supposed to, rejected that level, and then add lighter volume. Now, the problem here is really the reward to risk on this trade, because what it also did is you've got this bullish pattern out here, this little open window, this gap up from the 11th, from November 5th to the 6th. If you take a look at the high on November 5th, it's 266.12. The low of the next session, 271.25 out there. So, unfortunately, I could not recommend this as a short trade. I certainly looked at it yesterday, and because you've got that little gap up, that gap up is a support area. Until that window gets closed, Chipotle, right? You could certainly trade it. You want to get out of this trade if it closes above. If you are short, you don't want to really see this thing close above the breakdown candle, which will be October 18th. 293.57. I would give it a little bit more room. I'd go right up to the swing point high, which would be October 15th, 297, even Steven out there. You get a close above that, and it's telling you that it wants to actually travel higher. So right now, I'd have to wait for this window to be repaired. But really wanted to be able to show it because I know that there's folks that have called on this. I want to show you how the equity, you want to be patient. You want to wait for it to get back to where it is. But then you've always got to put together the reward to risk. Let's go see what it's actually trading at here in the pre-market. Give me a moment here to put up the symbol, and you won't see it on your screen, but I'll take a look at it on another screen here. So it's trading out at 274 in the pre-market here. So it's trading up just a tad, $1.20. So no great shakes out there, but it's traded at 274.50. It's been trading at 274 most the morning, almost in fact the entire morning long. First trade came out, it looks like, at 273. $3.53 and pretty much trade at $2.74. So you got to wait till Chipotle actually goes ahead and finishes completing, repairing this window so it no longer acts as support out there. And then what you're looking for is and then now where it could travel to, well, the October 19th level, whether it's the high of 250, 286, or the actual low swing point out there of October 23rd, 233.82, that would really be your price range. That would be on Chipotle out there. Let's continue taking a look at the markets here. We'll take a look at those. Well, let's go take a look at panel, Universal Display, because that is actually getting just simply the kibosh this morning. PANL is the ticker symbol. So that is down hard, was down hard yesterday. So it's going to continue to take a beating out here. Let's go ahead and remove, this did complete an A to B equals CD and gave you some bearish signs here on the 17th of September out there after it completed that A to B equals CD. This now coming back into an area where it last broke out. Of course, it was coming in with too much volume, way too hot. It's now going to be taking on this nice hammer candle out here from the 21st of May. So May 21st, the low there, 25.45. Well, it's taken that out in the pre-market, trading at 21.52. Let's go put this on a weekly chart out here. I'm just first on the daily chart. So it's even going to take out the swing point from August 8th, 2011. That, folks, is not a good sign on any stock chart out there. Let's go put this up on the weekly. So it's taking that level out. That was 22.73. It's going to take on the little last swing point out here, 21.51. That's where it's trading at. That takes you all the way back into November of 2010 out here. Has certainly a nice sign of strength out here from August 26th, but that sign of strength is now just simply evaporating because you're getting some pretty decent weakness in here. That was on Universal Display. PANL is the ticker symbol. As we come into the markets here, it looks like a pretty flat open. Dow futures up 16 points. ES Mini up 1 point, $1.50. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. Not really much of a race. You got the Dow up 6 points right now, S&P up 2. Composite up 7, small caps up 40 cents out there. Apple up 90 cents, Cisco down 2 pennies, Microsoft up 25 ticks, Google up $2 and change. They got smoked yesterday. We'll certainly take a look at that chart. Leading the charge on the way up, you've got Whiting Peat Corporation, or maybe it's petroleum. WLL is the ticker symbol out there, up 12%. Yeah, it's Whiting Petroleum out there. No news that I see on it, but it is up 12%, $5 and change. Qualcomm, I believe Qualcomm might have been out with numbers here today. Let's see if they were up 7% here right now. Qualcomm, let's see, what do we have here for their financial results? Oh, it's broken down. Come on, where is it here? Revenues, $4.87 billion versus $4.12 from the prior year. Income, $1.2 billion versus $1.2, so income in line. Maybe they gave some good guidance out here, up a nice 7% this morning. You've got DUSA Pharmaceuticals. DUSA is the ticker symbol out there. That's up a nice 37%. What do they have out here? No, merger. Okay, so that's up on merger with Sun Pharmaceuticals. You've got CenturyLink, CTL, up 5% this morning. CenturyLink, let's see if they're out with earnings. They did revenue $4.5 billion versus $4.6. So revenue really, no growth there, but in line. That's not too bad. Net income $400 million versus $377, so $413. So that is why that is trading up. You've got Oasis Petroleum, OAS, up 6% here. Bloomin' Brands. I wonder if that must be the what's the name of that restaurant, Bloomin' Onion? Anyways, Bloomin' Brands, BLMN. They're up about 13% this morning. Outback Steakhouse. I wonder if that is the total revenues here. I'll go check that out. Their total revenues look like they're up. I don't have the exact numbers on it. If we take a look at what's moving to the downside, you've got Concord Technology. They're off 10% this morning, down $6 and change. Universal Display, as we took a look at earlier, down 17%. Monster Beverage, down $3 and change. That's off 7%. Real Page, RP, off 9% here. Apple pretty much flat. Kohl's Corporation KSS off about 3% here this morning. Whole Foods, whole paycheck, down a couple points. WFM off $2 and change. Great store, just expensive. I had a request to go take a look at MGC. What's the ticker symbol here? MCGC. That is a private equity business, MCG Capital Corporation. As I take a look at that stock chart, well, number one, just as we were looking at Chipotle earlier, waiting for now you would never short a stock here, but it's good enough for, never short a $5 stock, I should say. This is trading out at $4.42. However, the same principles really apply, just as we were taking a look at Chipotle. This equity here, gap down with some good volume on August the 5th, 2 million shares to the downside. There is a open window, an open gap that was created. Really, if we take a look at the candle from July 27th out there, that low, $5.34, 1.4 million shares there. This equity made it all the way back up. Now, it took a long time to get all the way back up there, but it got back up there September 14th with 700,000 shares. So even coming into the area where it broke down on lighter volume, what did it do? Well, 2 days later, went ahead and you saw the next real sign of selling, 2 million shares to the downside. That was on September 18th. This thing really consolidating between the $5 range, and right now it's consolidating in the lows of $4.31. This got plenty of resistance up top of $5.33, and it's got mostly sellers in here. I don't see any bulls in here, so it's nothing that I would suggest that anybody go ahead and get in front of. That is on MCG Capital, private equity firm out there. Let's go take a look at, let me see if Bloomin' is still up there. Bloomin' is gone. So it's not on my top 10 list to the upside or downside here. Let's go take a look at what is. You've got AMC Networks. AMCX is the ticker symbol. They're up 12% out here. Their net income, $36.6 million versus $40, and revenues of $332 versus $283. So let's go see what this equity here is going to be bouncing into. AMCX out there. So gapping up this morning. Volume so far doesn't look to be anything that fantastic. Let's see, 148,000 shares. Last time this had a sign of strength, though, was with 2.5 million shares. So let's go take a look at this. Not bad. If you take a look at this stock chart, looks like it was a IPO going back. As soon as I refresh my screen here, let's find out. Looks like this may have been an IPO going back into the June 2011 time frame. Made a low back in August of 2011 down at the $29.60 area. So it's making about a double out here. Today, everybody in this stock is happy. Let's take a look at the longer-term A to B equals CD that is out there on this equity. And that, folks, we would start with the low. We'd come all the way back to the low from August the 9th, 2011, and we'll use as our B point out here, March 14th, 2012. That price, $46.69, goes ahead and pulls back. So we can see here that it pulled back. Well, let's do the retracement. Pulled back into the time frame of June 29th, 2012. Let's go measure that retracement out here from low to high. And sure enough, it does a sweet 618 retracement out there. So it makes that sweet 618 retracement. Now you can see price here traveling along the inside of that C to D leg. Also, let's go see if it took out the B point with volume out here. Let's use a black line. Let's use a red line. That wasn't a very good red line, was it? Let's use a straight red line. Might make it easier to do. And let's actually put it on the swing point. There we go. And let's go take a look at the volume on that swing point. So the volume on that swing point was pretty low. So I'm going to assume here that it actually was able to take it out pretty easily. So we're going to take a look as the swing point was taken. Oh, it was, surely enough. So you got a confirmed A to B equals CD on the last sign of strength, which was October 22nd. So the 1-to-1, $51.81. However, you can see with price traveling on the inside, suggesting that it wanted to do more than a 1-to-1. A to B equals CD. 1 to 1.272 is the next stop, 54.49. However, let's just take a look at expansions of swing points. Always important to take a look at expansions of swing points. Of course, I'll give you a clue. I used one of those yesterday to identify where we should go long and take a long position, at least a counter-trend rally bounce in the marketplace. If we take a look at expansion of swing points, already above the 1 to 1.618. So looks like this equity, which is AMC Networks. I wonder if that is the movie house. I'm going to go take a look and make sure AMCX sounds like it would be the movie house out there. AMC operates cable television brands delivering content to audiences. So in the cable television business out there, having a nice trading session. Let's continue looking at some of these stocks here that are popping and dropping. Let's go take a look at Concord Technology, CNQR. They're moving to the downside here, down about $6 and change, CNQR. So as we take a look at this, gapping down with volume. So this thing is headed for lower price. Let's go find out if it's got any support out here. Expand this out here. So it's coming back into an area where it broke out. Unfortunately, it's coming in with volume. Broke out. You had a nice wide price spread on this equity. May 3rd, you do 2.1 million shares. But if you take a look at that candle there, very powerful candle. Right now, that's where it's trading into. Again, 2.1 million shares there. Of course, in the first 13 minutes of trading, this equity has done 482,000 shares. It is coming back into that area. It is also taking out a swing point from August 3rd, 2012. That has 1.6 million shares. Don't get in front of this equity, at least not yet. Wait and see what it's got a couple nice signs of strength. Really, that's several. So what did they do that was, let's see what they did here to make this thing trade lower. Let's take a look at their revenues here. So Q4 revenues, 117 million versus 95. So they've got some nice revenue growth. Their pre-tax GAAP income, 23 million or 40 cents a share. I don't see what last year's was. Their Q4, they had a net loss of 8.2 million shares. I don't see the comparable here bouncing up on my screen. But it's really, the most fundamental thing about a stock chart is just reading the actual technical analysis of the stock chart. So, but it is not a bad-looking chart with the exception of today. If you take a look at this thing, it has had different signs of strength not all the way up. Let's take a look at them. You had one here, December 5th, 2011, 2.7 million shares. Gaps up. You come back and you test that area. It tested on the January 9th level with 814,000 shares. That was nice. What does this equity do? So let's go ahead and take a look at the personality of this equity. This thing gaps up again here on February 2nd, 2012, 3.6 million shares. Comes back and tests that area, tested twice back in April 2012 with 377,000 shares, also with 389,000 shares on April 23rd. So it comes back in to the sign of strength nicely on lighter volume, moves up. You have another sign of strength on this thing here, June the 4th. That level gets tested as it pulls back on August the 2nd. Pulled back on August 2nd with 2 million shares. That was the first sign of real weakness that you had out there. That 2 million shares was going against 2 million shares there. So kind of even, Steven. And it was also going against 3.5 million shares. So not enough to bust it down. Couldn't bust it down. Travels higher. Now, unfortunately, in this equity here, makes a high with 300,000 shares. No other signs of strength. The last sign of strength is the one that it's taken out, unfortunately, today, which was August 2nd, and now it's coming back to the one just before that, which is the June 5th time frame. It doesn't have volume at the highs. You wish that it did, because otherwise this could be a nice trade setup. But the personality is for this thing to pull back into its signs of strength out there. That is on Concord Technology. CNQR is the ticker symbol. Let's pull this apart just a bit more. And we're going to do that by just simply coming to the weekly. Okay, so coming to the weekly chart on this thing here. Nothing but bears have been in this equity ever since it made its highs back on September the 21st. Not a bull in place on this equity on the weekly chart. So I'll just simply cross that off of my list out there. That's why I always go up a step or two just to see what's going on. Let's go take a look at that Euro chart. Let's go look at that 30-minute chart. We know where Super Mario was hanging out. We know where the bulls were at. And if we go take a look at that, this is the daily chart. But let's go put this back down on the 30-minute chart out here. Euro not really doing a ton other than holding the bottom. And that's what we're going to need to see for a continued move in our markets here. Again, everything is in place for a bounce in our markets. We'll see. It's, volume came out of the market yesterday. That means those lows from yesterday are going to be attacked again. If we go take a look at the ETF structure out here, let's go take a look at the 10-minute charts on the ETFs. I'll need to refresh these here just to get make sure I've got the live data. And we'll take a look at the diamonds here first. So right now, the area where you would expect the diamonds to bounce to on a bounce, just like we took a look at as we were looking at Chipotle or anything else, would be the open from yesterday. That would be the 9:40 time frame on the 10-minute chart. That would be the price point of 131.05. You've got volume of 520,000 shares up there. The diamonds here are going to have to clear the swing point from 3:30 yesterday afternoon, 317,000 shares. Now, it looks like it's trading inside there right now. So as it came up in that first 10-minute session, it had 570,000 shares. Let's see where we at right now. We've got 2 minutes to go in this next session here, 138,000 shares. So it's not having the volume here that it needs. Of course, it's not up at those highs. Those highs on the diamonds being 129.95. Really needs to take that out with more than 317,000 shares out there. Let's go take a look at the, let's just look at all of the ETFs. Let's go take a look at the SPYs. Let's go take a look at, let me refresh my chart out here on the SPYs as well. The SPYs on the 10-minute chart making a nice little hammer candle down at 1140, makes the trading the SPYs really easy. You get a close below 139.06, even though it's a 10-minute chart out there. I think if we put on a 30-minute chart, we'll probably see a bullish engulfing that candle. In fact, I can tell you we will, just by looking at this here. So if you get a close below 139.06 on a 10-minute chart on the SPYs, if you're long, you're wrong. It's really that simple. And because it has set up a nice little area. It hasn't been tested. It has set up a nice area there of support. Now, the SPYs here are also going to be coming into the 9:40 session that has 11 million shares. But first, it needs to clear the same time period, which is 3:30 in the afternoon. 6 million shares. The price is 140.59. So far, it's trading inside that level with 4 million shares with 1 minute to go. So it's just trying to build up some energy to take that on. You get above that level on more than 6.1 million shares, then its next stop should be 141.68. Dow is up 41 points right now. S&P up 6. Composite up 11. Small caps up almost 2. We'll be right back.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks. Dow up 24 points, S&P up 5 right now. And Bloomin' Onions, Bloomin' Restaurants, B-L-M-N. Bloomin' Brands is actually the actual corporate name. So these folks, I don't know if most people have eaten at an Outback Steakhouse or a Carrabba's Italian Grill, or there's a few of the Bonefish restaurants around. You talk about supply and demand. We certainly look at the volume. And how often do you drive past an Outback Steakhouse near a dinner hour? So I'd say from probably about 5 o'clock on, and don't see a line out there. So they certainly have that brand going well. Pretty much the same thing. Carrabba's doesn't have the lines out there, but their restaurants are pretty food, and, for a chain restaurant, I've eaten at all those restaurants. They are pretty good. This equity here that came out, IPO'd back in August of 2012. Volume on that day was about 11 million shares. Now, makes a high out here. Last time there was any kind of sign of strength in this was on September 28th. I did about 3 million shares out there. It's been pulling back, and it's been pulling back on relatively light volume. Pulled all the way back to the IPO high, which, again, that price was $13.08. And obviously big volume on that day, so kind of hard to totally benchmark it off that day. But you can see that day is held. So it's got a really good level of support out here, which is at that $13.08 level. Having a nice day here this morning as far as revenues here. Now, I guess, certainly when you took a look at restaurants like Chipotle out there and the prices that they were fetching, it only made sense that you would see restaurant chains, food chains, Dunkin' Brands and so forth, trying to take advantage and ride those coattails. Of course, the coattails that we're taking a look at Chipotle are really to the downside for the most part at this moment. But if this equity here, if Bloomin' Brands were to pull back, I would say right now to the price point of yesterday, right around the $13.97, $13.44, might not be a bad equity here to take a nibble at. That is on Bloomin' Brands. And then, of course, you can go into Outback Steakhouse and say you're an owner of the company out there. Let's continue looking at the markets here. Let's go take a look at what else we have here popping. We've got Whiting Petroleum, WLL is the ticker symbol out here. So let's go take a look at that. Is second in the lead, up 13% here this morning. That's up about $6, $5 and change. So gapping up. And let's go see what This is it's going to go pay the bears visit. It's got a nice high volume area here that's trying to get into. Maybe it already did touch. That is the last sign of strength here, which was on September the 13th, was at a price point low of 48.59. Really, as it was making, it made a shooting star. Unfortunately, that's a bearish candle pattern that was confirmed the following session on September 14th, and then continued to pull back. Now, if we take a look at where this thing was pulling back into, pulling right back into this level here, that was a most recent sign of strength, which was July 26th out there, did 4 million shares. The high of that little swing point was $40.89. Never made it all the way back there. Let's take a look at, probably also completed A to B equals C off of that shooting star. Let's see if it did complete that. It did not complete that, so it's still out there, but having a nice morning with volume gapping up and taking on its most recent swing point. Should have no problem clearing the 48.87 level. That only has 1.3 million shares. So far, 4 million shares today out there. So it should go back and test that shooting star from September 14th, somewhere in the 52 to 54 plus dollar range. That is on Whiting Petroleum. Dillard's, the department store, they're up about 6% this morning, but I see we are out of time. Thanks so much for joining me, folks. Stay tuned. The Money Masters Show will be up next. If you're off to start your day, have a terrific Thursday. We'll look forward to seeing you bright and early tomorrow morning. Take care.